Markets were strong for yet another month. We've had an extraordinary run since the COVID crisis. The world index was up 0.7%, and the sort of key index, I suppose, in global stock markets, the S&P 500 US index was up 2.4%, which is a very strong month. The Australian market was up 1.1% for the month, with IML's portfolios lagging, still positive, but not by a very large amount. We lagged chiefly because the iron ore miners, which are quite a significant portion of the index, rose very strongly and accounted essentially for the entire gain in the index. Another detractor was Crown Resorts, which has not shown itself very favourably in the Victorian inquiry into their suitability to hold a licence. On the positive side, though, a number of our industrial stocks performed very well, chiefly amongst them Incitec Pivot, which has done very well on reopening its Walla or Louisiana ammonia plant and on very high fertilizer prices. And also Z Energy contributed very strongly as they had their investor day, showing that they're going to have steady cash flows and large distributions for many years to come. The Australian market is up 29% for the past 12 months and is up 70% off the COVID low. A large part of the country is currently in lockdown. We still can't travel, movements limited, a lot of businesses are shut, and yet the market is 70% higher. Now, some people think this is the time to really get involved because we're at the cusp of a new boom globally, and markets have been on a tear, house prices are very high. I think it's fair to say after such a strong run that caution is justified. We always are cautious and defensive, but now more than ever, with many of our stocks offering very, very attractive relative value, we think that it is the right time to be positioned in those defensive, cautious stocks after such a record-breaking run in the past year and a bit.